Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, for the next few minutes we're going to be looking at the Nasdaq 100 using the NDX cash market, and we're going to go straight into our Elliott wave analysis, and then we'll wrap things up with our basic technical analysis at the end of the video. So without further ado, let's get on with it. We're looking at the chart of the Nasdaq here. Essentially everything we can see on the screen is from the bottom of our proposed primary wave 4 around the 23rd of September, and we think we're in this final fifth wave move up. Now I've got this finishing higher. There is the possibility that it's very close to completion and could end at any moment. We will come and talk about that in a moment. There's also the possibility it's going to finish higher here. So we see our fifth primary wave inside of our fifth cycle wave of this 12-year long, or more than 12-year long bull market now, the longest we've ever seen. And I think it's coming to an end, and it could be coming to an end soon. Inside of that fifth primary wave, we have our 5 intermediate waves trading inside of this channel. Just need to move that over there. 1, 2, 3, 4, 5. We think we are in that fifth and final wave up. And so far within that fifth intermediate wave, it looks like we are very neatly building up a 5-wave structure. We can see here a series of waves to the upside, our minor wave 1, minor wave 2. This could be, and we're going to discuss this in a moment, this could be minor wave 3, or it could be an extension within minor wave 3, minute 3, minute 4, minute 5, into our target for minor wave 3, which is here, the purple line. This is 161.8% extension of minor wave 1 projected from the 2, bringing us to this target. We would then go into a deeper, longer, more winded correction of minor wave 4, and then we would push up to minor wave 5, the intermediate 5, the primary 5, the cycle 5, and complete this bull market. So that's the plan. So let's talk about the recent price action here, this correction we've been going through for the last few days during last week, and the evidence we can have of this potentially being a minor wave 3 into a minor wave 4 rather than a minute 3, 4. So why do I say that? Well, let's have a look at our wave relationships first. 5 waves into a minor wave 1, ABC flat into a 2. Now if we take our Fibonacci extension tool and we just run it up from the 1 to the top of the 1 and bring it down to the bottom of the 2, we find our top of our 3 at the 131.8. Not a bad target for a wave 3. 123.6 is also a target, but we normally aim for the 161.8, which is why I've got that purple line up here. So based on that, it suggests that it could be a minute wave 4 rather than a minor wave 4. Okay, so from that extension alone, we could surmise that perhaps this is 1, 2, 3, 4, 5 of a 3 rather than the minor 3 itself. But that is not certain. It just looks like it could be. Now if we come over and have a look at the minute wave degree, and we go wave 1, wave 2 here, we find the minute wave well beyond the 161.8, a big extension on this time frame into the wave 3. And we are somewhere between the 2618 extension of the 1 and the 3618 extension of the 1. So we're in target territory, we're just not coming directly to a fib. It would be nice to see greater confluence. We can check that initial measurement again on minor time frame in log scale just to see if there's anything that tightens it up. Now we do get to the tick a 123.6 in log, and that's a very nice target for a 3. So that actually strengthens the idea that this could be a minor 3 up here rather than intermediate 3. And let's just do the same now on minute wave degree and see if that gives us any insight either, because I think the jury's out at the moment. It could be either way. On log we don't get any closer, so I think it could go either way. This could be 1, 2, 3, 4 in here on the minute time frame, so 1, 2, 3, 4, 5 into minor 3, or it could be an extension into minute 3. I'm really not sure. So let's talk about what's been going on inside of this correction and a couple of targets we've got above our heads at the moment. Now there are essentially a couple of ways of counting this. I've got this as an ABC zigzag into a flat, into a 5 down to complete minute wave 4. So it would look like this: zigzag, flat, motive wave, 5 waves down in the C leg. Now the first zigzag played out really neatly. I think we get pretty much, if I come straight to the top, to the A, to the B, there we get to the tick parity. Here's the 100%. So this means the C is exactly the same length as the A. So there is an argument to suggest that this could have been the whole correction here, this C. The problem with that is this double bottom here, where we come up in potentially 5 waves and then drop down to the invalidation point. If you come in really close here, you can see that we actually do just tick over ever so slightly. So I'm not going to call this a 1-2, I think that would be kind of ridiculous. So I'm looking at another zigzag here, 3-wave move into the A, another zigzag here, 3-wave move into the B, and then a 5-wave move in the C leg of the B wave. Now I'm not sure if it's complete, so let's just budge this whole minute wave section over to one side for a moment, because that might be coming into play a little later than expected. So let me show you what I mean. We've got a 1-2 here. We've got some kind of 1, 2, 3, 4, 5, 7. There's multiple waves here that could easily be A3. So you could say, maybe pick this one, that one, and say you're done in 5 waves, and now we're going to start coming down in those 5 waves of the C. However, you could also interpret this as a 1, 2, 3, 4 here, with a 5 to take us above the start of the A wave into what we would call an expanding flat. So 3 waves above where the A began, 5 waves down below where the A finished. That would be an expanding flat. It's the most common form of flat pattern, and it would be 3, 3, 5. We could have turned around already though, in which case we should sell off straight away. Monday, Tuesday, Wednesday, all through the week we should start heading down. If we break higher on the Monday or the Tuesday and we come up to challenge this high, then it's more likely we're in a 3 down, 3 up above the start of the A, and then 5 down. If we break down straight away on Monday morning and continue to, or if futures open trade lower, looking like we're going to open lower, then it's likely we've already peaked and we're coming down in 5 waves of a C, of a 4, and then we're going to turn around once that's over and off we go. So let's look at potential. Let's assume the top's in, because like I said, price action in the early week is going to determine that, and we can adjust what we're seeing based on whether or not we come up. So let's assume it's in now. We'll take the length of our A and project it from our B, and we find the 100% here at 13,656 spot 48. So we could just come down A to C parity, so the 5 will end here with the C with the 4. There's also the chance that it could extend to the 123.6 or even to the 161.8 down here much lower. But if we just aim for parity first, we can see as the wave structure develops if we come down. Like I said, if we break higher, then we have to consider the idea of an expanding flat. If we break much higher, we have to consider the possibility that we've completed some kind of structure which concluded sooner. Something like this, and then now we're actually impulsing up 3 waves back and then off higher. That would be the only other way of looking at it, but I don't like the look of that yet, to be honest, but it is an opportunity. So now let's look at the proposed idea, possibility, that this is a minor wave 3. Now the reason I'm comfortable suggesting that it could be, we've got nice fib extension relationships. We could be coming up to the minor wave 3 target here, but let's just assume for the moment that the minor wave 3 is in, and the minor wave 4 is we're working on it. If that's the case, this white line here at 13,296.67 cannot be invalidated. The wave 4 cannot come back below this. If it were to, it would overlap, thus invalidating this as an impulse wave, and we'd be leaving that fib channel as well. So that we'd have to consider a top here at that point, and that this is actually a 1-2 down, 3, 4, 5, and the market has already peaked. It's a possibility. I don't think that's necessarily the case. I do think the idea that this could be a 3-4 on the minor time frame is possible, in which case this target here at 14,191 spot 77 is an interesting place for the market to potentially finish. Now I know that's a long way off the target I've got up here, but we only just need to clear the free. We only just need to clear the free to have a legal impulse wave to a new high. So if we do get that, and we end up looking something like this, and we just come above the high of the free, that would be a valid impulse wave, and then we could sell off. Now the reason I suspect something is waiting up here, it could be the minor 3, and then we go 4 and we go higher, and there's resistance here, but it could be the 5 of the 5 of the 5 of the 5 and the end of it. So is because we've got a really strong confluence, Fibonacci confluence here. We've got the 61.8% intermediate and primary of 1 and 3 from 4. Now what the fuck does that mean? Well, basically what that means is if we take the full length of intermediate wave 1 and 3 to this point here, this high on the 16th of Feb, and then we project that whole length of 1 and 3 on the intermediate time frame from the 4 down here on the low of the 5th of March, we come straight to this point at 14,191.77. Now, big whoop. It's just a target for intermediate wave completion at wave 5 intermediate wave, isn't it? We all know that. We know our Elliott wave rules. What makes it interesting is it's also the exact same spot for the primary 1-3 from primary 4, which is a way back. Yeah, so if we took the whole of the length of primary 3 to here of 1 and 3, which was the peak on the 2nd of September 2020, and we project all of that from the low on the 21st of September 20, it comes to exactly the same point. And I mean exactly the same point, 14191.77. Pretty rare to see both the wave 1 and 3 projection for primary 5 and the wave projection for intermediate 5 both potentially completing in the same place. That's very strong confluence. So whatever happens here, I expect to see some kind of reaction. So that's the level we're going to watch next week, guys. If we get a sell-off into this potential flat, then we can say we're in a C wave and we should bottom before this cutoff point at 13,296.67, this white line. If we were to break below that white line, fall out the channel, we could say actually we got very close and the market has topped and it looks like we're going way lower, and that's it, it's game over. If we come down into a 4 and come up, then we must keep our eye on this level, this confluence level of fib extensions at 14191.77, because this could potentially be the top. However, there's also the idea that if we do clear that yellow level and we push on higher, then we can say, right, maybe this wasn't the 3-4 of minor time frame, maybe it was minute, and then we can say through all scary resistance, the fib confluence didn't amount to anything, then this is our minor wave 3 up here at 1618, and then we can look forward to a 4 and then a 5 to go higher. So to sum up the Elliott wave count, we've got 1, 2 waves in. 3 waves in, we don't know exactly what wave degree. It could be relative to the 1-2 in minor time frame. 4, 5 at this fib confluence, and it could be totally game over, end of the bull market. Or we just need to break this level, get a completion before this white line, break up through this golden level here, this Fibonacci confluence, and move higher. If we move higher and get through that, I would be pretty confident that we're completing a minor wave 3 with a 4 to come and a 5 to go higher. If we hit this and turn around fast and violently after putting in a correction, then there would be a very strong argument to say 1, 2, 3, 4, 5 done, because these kind of confluences are rare. So that's it. Just keep an eye on, do we break higher on a Monday, potentially extending that B wave, or do we start the breakdown in 5 waves down in a C? And just keep an eye on price action. If we start the breakdown in 5 waves, but we end up doing something like this, and it takes us through this level, that's a really bearish sign. That's a sign that we've topped. If we come down to finish the C, bounce higher, then we've got to watch this level. I tell you what, I will mark it on the screen with a big number so you don't have to squint. And we will say the number we are looking at is 14191.77. This will be the next thing we look at. If we get a reaction here, then we've got to be on our guard, because this is a potentially very important level. If we smash straight through it and head to this, we can forget about it. It was just one of those weird coincidences, and we can continue our count, assuming minute wave degree into minor wave. So that's the end of the Elliott wave count section, guys. I hope that's been useful to you. We're just going to get rid of the Elliott wave count now. We're going to bring up our moving averages and everything else we need to do our basic technical analysis to wrap up the video, to see if there's any clues we can point to support our analysis. So we have a 10 exponential moving average in yellow, we have a 20 exponential moving average in blue, we have a 60 exponential moving average in orange, and we have a 250 exponential moving average in green. No volume profile on the cash market for us to enjoy using here, I'm afraid. It is not provided by the vendor. We do have an RSI set to a 10 close, green 30 level being oversold, red 70 level representing overbought. We have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. What can we see? Well, a bit of a double top going on at the moment. Could just be the same as we saw here before another move up, or this could potentially be the top of the market or very close to, knowing that that fib level is above our heads. Very indifferent candle for the last week, closing off of the lows though, closing nearer the highs. You could say this, if you saw this in the right place, you could say it's a bullish hammer. In this circumstance, if you get bearish follow through next week, you could call this a hanging man. Now, a hanging man candle on its own doesn't necessarily mean anything, but a hanging man followed by a bearish engulfing candle could be very negative and could be a sign of the market having reversed. So just something to think about on the weekly time frame here. Still above the 10, 20, 60 and 250 exponential moving averages, so we're still fundamentally bullish and have been for a long time. RSI on the weekly time frame is still showing up an awful lot of bearish divergence. We have the highs back here. On the, let's ignore the 20th Jan ones. We went from overbought to oversold. So let's just look at the more recent bearish divergence, which is this high to our current high. We have a high, lower high, and lower high in the RSI, while we have a high, higher high, and higher high in price. This is bearish divergence. It's been with us the whole time here on the Nasdaq, and it simply just won't go away like it has on the SPX, like it has on the DJI. So it's just still hanging around here. We still have divergence on the short time frame between the high of the week of the 16th of Feb and the high of the week prior to the last one, which is the 12th of April. We can see a high and a lower high on the RSI here. It's also confirmed in the MACD with this high and the lower high in the MACD, as is the high from the 13th of August to the high of the 16th of Feb, also high, lower high, the opposite of what price is doing. So there's strong signs over the weekly time frame, over the long term, that the market's out of steam or very close to being out of steam. Now, this divergence could still disappear if we get an extremely violent move up, and we push to new all-time highs and we push to new highs in the RSI. Then all of this could disappear, this bearish divergence, and we can forget about it. But we've got to get back above 80.47, 80.47 on the RSI, which is a big ask on the weekly time frame at the moment. Couple of little green bars on the histogram here showing a return to bullish momentum for the short term, at least, with a crossover of the short term moving average over the long term moving average, but not a particularly convincing one at the moment. So evidence on the weekly time frame that we're getting tired, evidence that we're running out of steam and approaching a potential major fib confluence, so we do have to be on our guard. Daily time frame above the 10, above the 20, above the 60, above the 250 as usual. Now, no divergence between these highs on the daily time frame. We actually get overbought confirmation here of this high in sequence with this high. High, 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 high. So that's actually quite bullish. That shows some strong momentum in this move. However, it seems to have recently died off. Two red bars on the histogram here, crossover for short term over the long term moving average and move away from overbought conditions. But this doesn't look like the beginning of a collapse in terms of momentum. It does not look like a violent pivot. It looks more like a gradual consolidation before one final move up. That would support the idea that we're going higher into a potential fifth wave after completion. So, you know, it could go either way. There's evidence that we're slowing down, but we're not quite there yet. So the primary idea that we've got another little move up into the summer still feels right at the moment. The idea, just to revisit the account for a minute, the idea that we're looking at a chart which looks like it's not quite done, even if this is free fall, it just feels like we've got one leg to do to finish off an impulse wave. Right then, so to sum up, just watch that level. Watch it like a hawk and watch this level, wave 1. If we invalidate the wave 1, we've got a completely different ball game to think about because we could have already topped. If we break through the previous high, then we've got to watch this level at 14,191.77. Okay then, so thank you for joining me on this technical analysis of the NDX. If you're new to the channel and you like what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you've got something to say. You don't have to. Hit the little bell notification icon to remain informed of future video releases. And if you're one of my patrons, I do want to thank you and say how much I appreciate you. Enjoy our conversations on Discord. I hope you're enjoying all your privileges. And if you are interested in becoming a patron, there's a link to my Patreon in the description box below. Multiple tiers for you to look at, and we've got some if you're interested in the tier 3 devoted Patreon, which is £15 a month, we've got 25 or 26 stocks coming up to ex-dividend and payment date next month, so it's going to be a really busy month. A lot of opportunity there, plus all the other benefits you get for tier 2 and tier 1 as well, you know. So I would say though, if you are interested in joining, maybe leave it a few days and just get in at the start of the month in May, so you can avoid paying twice, because you'll be paying for April and May. So just giving you a heads up. Anyway, totally up to you. Go and have a look, see if you're interested. All the best, guys, and I'll be back with you sometime next week. Take care. Bye bye.